Welcome to the Journal podcast from the Chartered Insurance Institute, a place for thought-provoking discussion from the world of insurance and beyond. I'm Michael Bond, social media and production executive at the Chartered Insurance Institute. In this episode, we'll be talking about Prize Indemnity Insurance. We'll be explaining what it is, the types of things that it covers, the individuals and organisations who may take out this type of insurance, as well as applying it to real-world scenarios. Today, I'm delighted to be joined by Tom Stagg, underwriter at Worldwide Special Risks. Tom, thanks for joining me on the podcast today.
Thank you for having me.
So, to begin with, just to give people a bit of a flavour, what exactly is Prize Indemnity Insurance?
So Prize Insurance is a specialised insurance product under the contingency umbrella, which effectively allows companies or organisations to offer large prizes for a small premium or a large number of smaller prizes that might be beyond their budgets in say, a marketing campaign or some sort of event. I think two really clear examples of prize insurance would be hole-in-one insurance to start with. I think if you haven't played golf, you're all aware of what a hole-in-one is and the excitement that comes with it. So companies will offer companies might have a golf day and offer a hole-in-one prize. And if somebody gets it, they don't want to be in the hook to pay out. So the insurance would effectively pay out for the liability that they have if someone actually won. And then on the other sort of side of the industry, you've got retail promotions, where a company might offer a reward scheme or a cashback incentive, where clients would redeem a voucher and, potentially the campaign could go really well and they would have too many redemptions. I don't know if you should be showing my age here, but something like Orange Wednesdays, which I think is Meerkat Mondays, or it's something like that. If absolutely everyone did it, then the company would be on the hook for a lot of, 2-for-1 cinema tickets. So an insurance company can put policy in place to help protect that.
Fantastic. I mean, you mentioned hole-in-one insurance there. What other types of risks or prizes, I should say, which is this one? Because I suppose we look at other types of insurance and it's all very much, we hope we don't have to claim, and vice versa. We hope we don't have to put insurance out for this. But this feels more like a fun one, if you like, a one where you actually want to put out. So what types of things do you cover in addition to hole-in-one insurance, for example, and golf competitions?
Sure. I mean, I think it is fun insurance, but we still try not to have claims if possible, as a fundamental rule in the way we approach it. So prize insurance typically fits into 3 or 4 categories, beginning with mathematical-based risks. I mean, all risks typically try to get boiled down to a mathematical figure, but specifically mathematical-based prize policies. They're the easiest ones for us as underwriters to look at because it's black and white. It's a lottery risk. It might be a 1 in 100 chance with an envelope pick to win a jackpot prize of £1 million. You don't have to be an expert to figure out the odds on someone winning that. What's maybe slightly more subjective is a sports-based risk. So with sports-based risks, starting with hole-in-one insurance, you've also got basketball shots, a halfway line kick where someone wins £1 million if they come on to the field at halftime and hit the crossbar. We actually had an example a few years ago where somebody came on at halftime, probably during tea, to a cricket game at Trent Bridge, and they, sponsored by a cider company, they were required to take three bowls at the stumps. They had to hit the 3 stumps with their first ball. A stump was removed, hit 2 stumps with their second, another stump removed, hit the 3rd stump. And the guy who'd stepped up actually did do it, and he won the jackpot. And
brilliant.
From what I understand, he had been sampling the cider as well that day, so it was even more fantastical they'd done it. So that you've got the sports-based skill risks. Another skill risk would be knowledge-based risks. So quiz shows like Who Wants to Be a Millionaire or something similar, where it's more subjective as to the difficulty of the questions. That would be another example of prize insurance. Moving on to over-redemption insurance, which I think I touched on before, something that brands can do to limit their exposure in case a promotion goes too well. And then another example would be conditional rebate. So conditional rebate, one of the more famous ones would be a snow on Christmas Day promotion, where a company offers cash back if it snows on Christmas Day. And I think the underwriters are the only ones in the country hoping that it doesn't turn into a white Christmas. Or more relevant to the upcoming World Cup, a lot of companies might take advantage of the hype around the World Cup and do a promotion. So a company, a large company that sells TVs or furniture, they might do a promotion where if you spend over £1,000 and England win the World Cup, you get your money back. And then they can figure out how much exposure they might have and take out a policy with an insurance company. Now, obviously, if they want to insure England winning the World Cup, due to some probably misplaced optimism, it's going to be quite expensive. And if they wanted to take out a policy with Scotland to win the World Cup, no offence to Scottish football, probably be a little bit cheaper. And that's the kind of way you have to look at it.
Yeah, historical data for England especially is probably not in our favour at this moment. So we definitely have the optimism going in. So hopefully that does happen, of course. But,
yeah, exactly.
But yes, definitely a bit of optimism there. And digging a bit deeper then, from an underwriter's perspective then, it's quite interesting. So when there's more of a lottery-based system, let's say you said there's 50 chances, 50 tickets, you pick one, there's a 1 in 50 chance. Clearly mathematical, very specific. If there was someone maybe in a different scenario, so one, we might touch on this a bit later as well, one policy that I saw sort of come to light was in America, there was a basketball halfway shot. And the guy got it in, $50,000, all celebrate him.
I think I know the one you mean.
But within that one was you couldn't have played basketball at a college level or had any part of that. And the details in there, on the face of it, is fantastic. And I watched it thinking, this is brilliant. He's just scored halfway line shot, $50,000. But there's more to it when I looked at it than just do this one thing, get the prize. And obviously skill-based, it's a bit more. You don't know how skillful they are, but there are things in the policy put in place to protect against elite athletes or people who are more practiced in that sport potentially taking part, because then that changes the odds almost against the insurer, if you like. Absolutely.
So I know that exact clip you're talking about there, and I've seen it a few times circulated, and it is the big bad insurance company didn't pay out is the sort of narrative. And the fact is, you're absolutely right. There's caveats in there regarding whether a professional can play. So if we were to take out a hole-in-one policy, if we were to underwrite a hole-in-one policy, we would have much different rates for an amateur versus a professional. And that's the same for any sporting risk. Now, I think the key thing you touched on there was regarding the details that are in there. Now, as underwriters, you have to decide whether you would underwrite that in the first place. So we wouldn't underwrite in a hole-in-one policy with a whole load of, Rory McIlroy taking all the shots. You have to have caveats in there to mitigate the risk. So it's so important from an underwriting standpoint. There's so much importance in the client understanding the policy and working with them from the ground up to make sure that there's no ambiguity about what's allowed and what's not allowed. And then in the example that you've given about the basketball, a client would be encouraged to have some sort of waiver in place so that person is legal. Their legal responsibility to pay the person for the winner is sort of protected by a waiver that states very clearly, I'm not LeBron James, if there's any ambiguity.
Yeah, no, absolutely. That makes complete sense, because there's two totally different scenarios there for an amateur versus a professional, and it really stacks the odds in a completely different favour, which means the underwriting has to be done completely differently for that person or that event. And touching on that as well, what would you say the industries or organisations or even individuals that take out this type of policy, who would they typically be?
So again, this kind of ties back to the mechanic and the actual competition they're looking to do, and the sort of response they're looking to get from it. From very, very simple hole-in-one insurance policies or roller dice or safe crack policies, the type of thing that a small summer fate type event might see, versus large international companies that are taking out retail prize promotions that are going to make massive impact for them and try and generate loads of following or loads of interest. So we insured for a European petrol station a scratch card loyalty program, which generated a load of interest and a load of income and a load of subsequent loyalty for them, and at the same time offered a huge life-changing jackpot amount of money. The premiums, they range from £200 policies for Mr. and Mrs. Smith, who are trying to raise funds for the Lifeboat Association in Newquay, and then, as I say, you're looking at £200,000 for a large retail promotion that's hopefully going to change a brand's luck in Europe.
Yeah, there's a lot of difference in scale then. So you can have something quite small that you look after, but also on the other end, you could have something where there's a huge jackpot available. Obviously, the premium would have to be adjusted for that, where there's, like you said, £200,000 for potentially millions of prizes in that respect. If we use the hole-in-one example, just as a scenario here, I remember I went to Alton Towers a while ago and they had one in the middle of a bay of water, a little green with a little hole, and you hit it in. I can't remember what the prize was, but let's say this is an example. Hit it in there, £10,000 the prize. All of that, very difficult to do, get it to stop on there as well. Not much room at all. How would you go about underwriting that? What would be the key factors? You touched on a few already, but what would you, in that particular scenario, what would you be looking to understand, and how would you calculate that risk?
Sure. So for any sports-based risk such as that, we have to try and use a sort of a balance between our own personal experience. There's probably a reason why in our Prize Insurance office there's a large number of keen sportsmen who all like to think that they've got a pretty good handle on the difficulties of this kind of thing. I think if you saw me hit a golf ball, you'd know I was probably a good low bar for the average golfer. So trying to establish the difficulty of it happening in the first place is the key thing. So not only do we have our own perspectives, but we've got historical data. Anytime there's a new a new type of promotion, something that hasn't been done before, if there isn't the data to support it, it's going to be harder for us as underwriters to support the risk. With something as standard as a hole-in-one on a normal golf day, there's years and years of data that support the chance of a hole-in-one going in. So being able to establish the likelihood of one shot going in, the amount of attempts that are going to be taking place, and then the prize value that's looking to be won. So they'll be typically the three factors that would determine how much that type of policy would cost. But almost more importantly, as importantly with prize insurance, is understanding how you can ensure the contest format is fair, and how, if there is a winner, how it can be established in a linear way. So where all the steps follow to ensure that if there is a winner, we can guarantee that it happened fairly and complied with the insurance.
Absolutely. I mean, and building on that then, so what does that process look like then for the winner? Let's say, well, it wouldn't be me, but let's say someone who could play golf managed to do it, hit it in, it went straight in, fantastic. What does that process look like, and what would you need as the insurer to pay them out? What would you need from them? So
it's very much dependent on the mechanic again. So hole-in-one insurance is going to be different to a lottery. It's going to be different to a safe crack. With hole-in-one insurance, you've got different variations of prize. You've got different levels of tournament. An event that has a £5,000 to £25,000 prize on it, that's a one-day event that we've insured a lot of times, might have a certain level of security, whereas a much more high-profile event with a £1 million hole-in-one up for grabs, the security is going to be very different. Ultimately, I think the key factor, once again, with all our insurance policies, is that the contest format, the mechanics behind the competition, they're built from the ground up with a claim in mind. So that if there is a claim, there's no ambiguity about what's happened. And there are different layers of security as well. So I think hole-in-one insurance is a good example, because the first layer of security really starts with the underwriter in the first place asking the correct questions, making sure that the policy's nice and clear, and making sure that the client is actually knowledgeable about what they're doing. And then the second layer would be the actual security level that they're at, depending on certain factors. It might be that video footage might be a factor, or it might be that they have human witnesses in place, which sounds like a strange thing to say in the age of AI. Actual human witnesses might be present. So yeah, there's different levels.
No, that makes sense. And yeah, imagine it probably wouldn't be witnesses as a couple of his mates. There'd be a few people around there. Maybe
be surprised. Yeah, a couple of mates on a stag do in Portugal claiming they all got hole-in-ones might raise more red flags. Yeah.
Yeah, absolutely. So, but it makes complete sense. You would have to have verification for that. They may well have a camera there ready just to watch it and capture in case, or have officials there waiting to capture that.
And
so that's really important.
It's typically layered so that if one of those things breaks down, it would be backed up by the others, or vice versa. So it would be hard to fall all the layers of security.
Yeah, absolutely. Or you have to be a bit of a genius to manage to pull that one off. But is there anything that organisers maybe commonly underestimate, or they have assumptions about things that actually are completely untrue, or even just slightly untrue?
Is it misconceptions maybe? Yeah. I mean, I think first and foremost, the biggest misconception with prize insurance is that we don't have any winners. And if we didn't have winners, our claims manager, Scott, wouldn't have a job. But on the flip side, if we had too many winners, I would likely be out of a job. So the fact is we do get winners, and across, you mentioned yourself earlier, the basketball, the one in America that you saw. So you only have to go on YouTube to see how many winners there are in this type of industry. We as a company will get dozens of hole-in-one winners. We've seen winners on our other prize products. There's winners on lotteries. There's winners on anything. And it's important as an industry that the winners are showcased when they do happen, because it's important for the clients as well, because effectively people are paying for the opportunity to celebrate a winner and to create some noise about it. So when they do happen, we like to encourage shouting about it as well.
Yeah, absolutely. Yeah, you want to promote it, wouldn't you? You want to make sure people can see it so they don't think, oh, this never happens.
Yeah, exactly. I mean, the amount of times people will say, oh, it's never going to happen. And that's not made of wood. You're holding your breath every time because you know it's going to happen at some point. I think the other misconception is that the product exists at all. We still speak to brokers up and down the country who are quite unfamiliar with prize insurance, and it's an area where as underwriters we don't expect all the brokers to be that knowledgeable about it, or the clients to be. So we have a very much a responsibility to sort of educate the brokers and the clients when we get the opportunity to. Because, as I say, it could be a need or an opportunity for a broker and their clients that they just didn't know existed.
Yeah, absolutely. And with different types of risks going forward and sort of a changing landscape, more social media as well. You have influencers running promotions, for example. You have even do like giveaways as well that they're running, go and buy this car, and how they're using their market to drive followers and drive clicks and likes, and they're using probably this type of insurance. You see a growing area amongst social media influencers or people on social media and using that to drive their marketing as well.
I mean, just to be clear, I mean, we would consider ourselves to be experts in insurance first and foremost, and we're not experts in digital promotions. What we have seen is clients coming to us, and the entry methods and the way these competitions are advertised is increasingly towards the digital media world. I think it means that when clients come to us to discuss a promotion, the way the clients enter the competition, how a voucher can be redeemed, how a winner can be qualified, if they are using digital aspects, it's going to be something that we would need to be involved in early so that we can understand that and be able to qualify a winner. There are companies, as I say, we're not the experts in digital promotions. There are companies out there that are. So we engage with companies like random.org, who specialize in providing digital services such as a random number generator to lottery providers, which then takes the responsibility away from a client or an organization to comply with the various aspects that an auditor or an insurance company might want them to. When you think about lotteries in the past, it used to be Dale Winton with his giant machine and giant pink balls flying out. And now you're talking about people able to access random number generators from their offices all around the world with one click of a button. Yeah,
absolutely. It's changed it's been in the last 20 years or so. Like you said, I do remember those days.
Dale Winton. Yeah.
Absolutely. Yeah. It was doing the lottery numbers as well, watching them come out. But yeah, it's far more, there's a lot more digital aspects to these as well. And I'm sure that, like you mentioned, there's touching base with Prize Indemnity Insurance at the moment. What other sort of emerging risks or trends would you be seeing in that area, and as we go to sort of a more digital focus with certain events or certain prizes?
Yeah, I mean, I think one of the key ones would be esports. Probably about 10 years ago is when it first really took off. I remember speaking to a colleague whose son used to want to be a footballer, and then by the time he got old enough, he wanted to become an esports footballer rather than a footballer. And so that's obviously the same kind of policies are in place. So you get contract bonus, for example, that a normal sports team would have. Well, it also can now fit to an esports team. I think regarding like the impending challenge of AI, just like any industry, we're all sort of holding our breath to really see how the dust settles and to see how it's going to impact in a fundamental way. So it's a case of underwriters and the industry in general being prepared for future changes and just staying knowledgeable.
Absolutely. And AI is a really big thing at the moment in lots of different areas, not just insurance, but in lots of different sectors. It is something that's being taken note of, and we almost have to be ready for how things change as well and how that's used to use within our profession. Touching more on a bit of a personal subject now, we've talked about this special loan insurance. You don't really hear too much about it, but it is a fun one to talk about, an enjoyable one to talk about. What do you enjoy the most about working in this particular sector?
I mean, you're spot on. It's something that when people, I went on a date, someone asked me what I did. I said insurance, but it's the fun insurance. Unfortunately, she also worked in insurance, so she saw right through that. So it's an element of there's an element of creativity required to work in Prize Insurance. There's an element of competitive and creativity required. Anytime we get a brief that sort of is outside of the usual scope that we might see, we're required to have as I say, put a creative cap on and come up with some ideas maybe, or work with brands that you might not normally associate with insurance. I'd be lying if I said being able to talk about sport a lot during the day isn't a good thing. I get to, I don't get to go outside with a basketball and see how many times I could shoot from the halfway line before I get it in. There is more scientific ways of figuring those kind of odds out. But yeah, the reality is it's also a product that caters to such a vast array of clients. On the same day, you would have a meeting with a large Lloyd's producing broker about a prize risk for a multinational company. Later on that afternoon, you're speaking to, a private individual who's organising a charity golf day for his local hospice. So you get a real balance and flavour for all walks of life, which is really cool.
That's fantastic. Yeah, no day is the same. It just seems to change day to day, and it's a bit of variety. I think everyone wants that in their role as well, which is sounds really interesting. Just to finish us off, I suppose, would you recommend this area to other people, and why would you recommend it?
I would recommend not too many people, because I like to keep my job.
Of course.
But no, I absolutely would. And I think it's something like Prize Insurance. It requires new faces and fresh ideas, especially ones who maybe have got experience in things that I don't have, or that my colleagues don't have. Because as I said, I think earlier on, there is an element of subjective thought that needs to go into this job, and being able to have real world experience in various sectors that other people don't would be a real advantage. So yeah, absolutely.
Fantastic. Yeah, this has been a really interesting discussion. Same with lots of other areas. You don't think they touch many people's sectors, or people may think, oh, that don't affect me. But your favorite sporting team, your favorite sporting event, all these competitions that go on, and the TV shows that you see, there's an insurance there protecting against those multi-million pound assets or thousands of pounds worth of assets, which is really fantastic, really interesting to know. So thank you so much for joining me on the podcast.
No problem at all. Thanks for having me.
And thank you for listening to this episode of the Journal Podcast. You can find useful links in the show notes and related articles on the Journal website, along with further podcasts. Please, as always, like, review, and subscribe. Until next time, goodbye.